Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, November 1st, 2023. So things are going as planned. I had said on really Friday that it was not going to take much to ignite a big short covering rally. Now, it's the bulls had everything on their side, and everybody was bearish on this market. We can tell from the 3% and the 1% bullish sentiment reading. We did have bullish divergences, and nobody had any reason why they thought this market would go up. But the thing is, heading into this week, Fed weeks, the bulls like to play games with the bears' heads, meaning that things are so bad geopolitically that the Fed may cut rates or something. Nobody really expected the Fed to cut rates today. They were going to leave them the same. But when you're short and you just don't think this market's going to go up and you're very complacent, you don't, you get blindsided by this. What happens is you just keep, you keep shorting on the way up, and then eventually you just get squeezed out. And the thing is, so the bulls had the Fed meeting going on, so they're able to, like I said, play games with the bears' heads and get some of them to start covering, and then from there more start covering, and then on top of that, it's November 1st, so the first trading day of the month, and a lot of fund managers, they allocate money into the market. So there's the whole what I look at my job as doing these reports and everything for you guys is to think of it as like a chess game. What move can I make here for this? And if nobody's really looking at the past and what the market does heading into Fed meetings, and just when everybody is short the market, which most people don't know anything about that. We're one of the only ones that have the software for it. But when you have that information, you could step into it. Now, don't get me wrong. I chickened out down here. It was one of my targets, but I just... I was a little nervous going. I didn't really want to be buying into holding on to through the weekend or with a new position. So, I decided just to run with a third of a position, and that was it. That was my cautious end of it, and that's But the thing is that we were looking long the whole time. We weren't looking short. So I can pretty much tell you that 95% of the newsletters out there were looking for a little bounce back up to the, say the 4150 or somewhere in this resistance, and then come back down. So when we went up and we started getting these little moves, the bears started shorting, and this is how it ignites. And eventually what happens is it keeps catching on. So I think that we're going to get, we're going to find some sellers right around that 4260. I'm not even ruling out the 4276. And if we do get into these levels, let's say we get up to the 4256, I'm going to take my third of a position off, just because I've been saying this. Part of my ways that I control my emotions is I'm just looking for singles and doubles. There's times that you look for the big home run trades, and with everything going on geopolitically, I don't want to wake up and see this market, the future's down 50, 75 points because the war expanded. So I'm fine taking these little ones. I wish I would have taken a little bit more down at the bottom. But again, the risk reward on that was just not there for me, because holding on over the weekend was very dangerous. But then when it didn't expand, then the bulls were able to take advantage of the Fed week and heading into the first day of the month, and this is where we are. So my trading plan is this. I put these here because I actually see another inverted head and shoulders pattern possibly forming, meaning we have this is the head, this is the left shoulder, this is the head, and we come up somewhere up into this 4250, come back down to the 4180, somewhere in this range, possibly even a little bit lower than that, and we form the right shoulder. Now, if this plays out, I don't know if it is that, but it's on the right side of the chart, meaning that it's not up top, it's down below. And if this actually plays out where we come down and up, this would be vicious for the bears, because the target is all the way up here, up at the 4,100 level. So, and we probably would just come up and close this gap too at 4,401. So don't rule that out. We're getting very close to where people start looking at the Santa rally, I mean, again, a lot of things have changed over the past 12 years. One is the Fed's not giving free money out. But in any case, we're still going to get this Santa rally that's going to come, and it may have sparked. I don't believe in this whole thing. I don't believe that our economy is doing any good or anything like that. But I trade what's in front of me, and when I see everybody bearish on the market and buy signals, then I'm make my trade and just try to manage it, and that's what I'm doing right now. So upside resistance is going to be the 4256, 4276. I don't believe they're getting above this level, so expect a pullback. Now, if you want to just manage your trade, just wait, and then you could either put a stop at your entry at 4160 if you got long there, or you just put a stop below here. Me personally, I'm taking it off, and if it comes down, as long as it doesn't break support and we're not screaming lower, I'm going to look to buy the dip. But again, I'm going to be kind of cautious on this. It's just the way I'm going to be trading it. So support levels are, the first one is going to be right here. I mean, this is obvious, clear as day. We got price support, and we got the moving averages that are crossing. So this is this is the area that 4,200 is support. If they get below that, which they may, then we're looking at a move coming down to the in this area here. It's all pretty much the same, the 4176. So I'd still be interested in buying, but I want to see some backing and filling and sideways. If we just go up, then I'm waiting, because I think it's going to come back down again, and we're probably going to be able to get in near that 4160 level that we got out of. But right now, I'm pretty sure that we're going to see some sellers at 4256, 4276. So I'm going to keep an eye on it, but I'll let you guys know early in the morning. But no bearish divergences. So down and up to the 4276 would make the most sense. That would probably give us some bearish divergences. If you want to look on the short side, you can. If we get sell signals, the one thing that's not going to be lined up on the predictive analytics model, I don't see us being extreme bearish sentiment unless we're coming back down to these levels, and I don't see these bullish sentiment readings coming out even if we get up here. So the predictive analytics model is going to be kind of just on a technical basis. It's not going to be off of sentiment or time, because time is kind of neutral in that. So if somebody wants to take a short trade, they can. I'll feel it out and let you guys know. But right now, let's just manage this trade that we have open right now. Have a great night, and I'll talk to you guys in the morning.